All right, let's just get this out of the way at the beginning. Bitcoin, if it does what I'm about to cover with you in this video, is in deep shit. There's no other way around it. I don't actually think we're particularly bad right now, but there are some things that are developing here which are slightly concerning. And let's start it off with the very short-term analysis to really dive into what we're looking at right here. And I think that the first thing which we definitely need to pay attention to is the fact that Bitcoin has topped out multiple times now at $25,000. If we take a look at what happened last time, we didn't actually hit $25,000 as much as we did on this occasion right here. If we actually go ahead and measure how long Bitcoin spent actively trying to break 25K, that time frame lasted about 3.5 days. But if we compare that to what happened more recently now, we're looking at closer to 5.5 days. So we've spent a little bit longer trying to more or less attack that resistance level. And I think that's a really good sign. But what it also means is that we've now had more rejections at 25K than we had previously. Again, not necessarily a bad thing, but it does potentially indicate that Bitcoin could be in a little bit of a short-term top. And so one of the things that I mentioned to you guys in one of my recent videos is that basically this range, right here could be an interesting place that Bitcoin takes a bit of a break basically before it continues to rally up. And I think that's fairly possible right now, to be honest with you guys. It's definitely something that would make sense for the market. Even if the price of Bitcoin falls as low as down, to this support area roughly, I think that could also still work out pretty well. And I've actually got 3 scenarios that I'm going to be covering with you later on in this YouTube video that cover if I think Bitcoin can drop down, below 21K, below, to set new lows, if it kind of rallies up in a somewhat bullish way, and if it rallies up in a very bullish way. And of course, at each point that I outline these possibilities for you, because they are just possibilities, I'm also going to tell you what I personally think is going to happen and how likely I think each of those things are. So that's where you get in with this YouTube channel. Obviously, we're covering all angles, and then I'm telling you where my particular bias is as well, because obviously I am an active trader in this market, so it is essential for me to have a bias. If I don't have a bias, I'm not going to make money. So here's the thing. We had our resistance right here. We've been rejected a couple times. I want to zoom in again, just metaphorically, on the fact that Bitcoin has spent more time trying to break the resistance now than it did previously. And the reason that is particularly important is because if this resistance was actually going to be a significant challenge for Bitcoin, we probably would have gotten rejected quicker, like over here. But we didn't. We've been rejected much slower than last time, basically twice as slow, nearly, or something like that. I don't know, like 60% slower. I don't know, whatever. And that is a good sign, right? I mean, if the market was actually going to be very bearish, we probably would have seen a slightly faster rejection. And the other thing is, I mean, since we've now had the rejection, we're kind of moving in a similar way. We're actually, in our case right now, we're actually dumping a little bit faster than we dumped previously. Not that that's particularly concerning, but I'm just trying to draw to your attention that we are doing something that's kind of similar to last time. And, obviously last time it went pretty badly for Bitcoin. But the thing is we do have this area of support. And we had this area of support previously, but we've had more of a chance to develop this area of support with rejections right here, consolidation inside, resistance on top, support on the bottom. We've had a lot of opportunity since back here at the end of August last year. We've had a lot of opportunities in this market to further develop this range. And that's through testing it, that's through consolidating inside of it, and so on and so forth. And the reason that that's important is, in my opinion, that's going to strengthen a level, right? I mean, the longer you interact with a level, especially if it's across broader time frames, to me, that the stronger it gets in this particular context. Now, obviously, if we keep on, for example, like the resistance area here, if we keep on hitting it and hitting it and hitting it, that doesn't mean it's getting stronger. Probably just means it's getting weaker, right? So that's actually a good thing for us. But with this range right here, that is something that I want to draw your attention to. But if we zoom in a little bit further and we take a look at some of the key indicators that I like to use, this kind of optimistic picture gets a little bit worse. So take a look at this. This is something that you're going to find very interesting, because if we look at one of the key indicators that I love to use, which is the 1 hour Ichimoku cloud, we can see that we were, finding some support off it for a little bit. It was actually pretty good, right? This wick came down to the Kumo, basically bounced off it. Yes, I know I didn't quite touch it, but that's good enough. On this occasion, we fell onto it and bounced up. On this occasion, we fell into it and bounced up. Again, a little bit of a catapult from here as well. And it kind of stopped the dump over here as well. You can see that, the price was somewhat aggressively dipping until we reached the cloud. Then it kind of slowed down a little bit. So it was definitely working, but in the end, we ended up losing this cloud. And that is another indication that actually we've lost some strength on the short-term time frames. But the good news with this stuff is, and I've covered this with you extensively, is that when we zoom out, we have so much support, and this is going to build a lot more of what we're going to talk about for the rest of the YouTube video. By the way, guys, if you're excited for it, do me a favor and smash up the likes as you are watching this. And I also want to highlight something to you that's very cool, which is that OKX with the 30k rewards that they've been running is super cool, right? You get up to 30k for signing up to OKX and using it, and it's super easy. Just register, you get up to 10k, deposit $50, you get up to 10k again, trade and you get up to 30k. Very cool indeed. But another thing that they're doing now for the first, I can't remember, it's either for the first 50 or the first 500, I really should know this, but for the first 50, or I think it was first 500 people of you guys that sign up using my link down below, there's a little promo you're going to see. You're going to be getting another $100 up to $100 fee rebate just for signing up and using the platform as well. There's 2 different offers running. You can find details of it down below the like button as well, so I'll list it in the description and the top comment of this video. Definitely check it out. They're giving you a really cool offer, and this is, I won't even say it's time sensitive this time, because it's literally the first 500 of you that take advantage of it are actually going to be able to use this. So definitely grab that while you can. But moving back to the analysis here, 4-hour time frame as we start to zoom out, still looking pretty damn good in my opinion, guys. I mean, look, we have lost a little bit of our momentum, right? On the 4-hour time frame, we were finding some nice support from the momentum right here, but again, we zoom out a little bit more and the picture brightens up a little bit, right? We're not quite down to those support areas yet, but they're right next to us. I mean, we don't have to drop much lower to find them. And so if we look at the Ichimoku cloud on the 4-hour time frame, this is really good. What I really like to see personally is when indicators that I love, indicators that I use regularly, actually line up with my horizontal boxes, my horizontal lines, right? And that's exactly what we have right here. Obviously this level that I outlined for you guys is the same level that you saw previously, right? I could just stretch this out. It's literally exactly the same thing. See, it's the same consolidation zone that we were in, the same area that we got rejected. And so this is just a logical area of support, right? It might not be a particularly strong one, and if it's not, then we have some support a little bit lower, but it is still a support level nonetheless. I actually want to take you over to some of these charts as well, because this is another thing that Bitcoin's actually failed at, which is its ascending triangle. Now, this is also something that I covered in a recent video, so shout out to those of you that are subscribed and watching this content regularly. You're obviously not going to be missing a beat in terms of how important this analysis is. If we actually draw a resistance line like this with a support line like this, and then zoom into, let's say, the 30 minutes, we can see very clearly that Bitcoin was in an ascending triangle formation, which is obviously pretty bullish, and Bitcoin loves to paint these. Again, you're going to know a lot about this if you watched my recent videos on it, but we ended up falling below it right here, and that in itself isn't particularly worrying. But then we also got what I call the kiss of death, where not only did the price fall below it, but it then came back up to find resistance and ended up dropping significantly lower. Now, on the initial breakout, we fell down by about 1%. So, 1% breakout rule, 3% breakout rule, depends on how picky you are. But clearly this was legitimate, because the next time we got rejected, basically in one leg straight away within 3 hours, we fell down by 2.5%. So this is clearly a rejection. Now, could it be a fake out anyway? Could it be a bit of a deviation and we come back into the range? That would be extremely typical for Bitcoin. Honestly, that would be so normal if we ended up doing it. But obviously, conventional technical analysis doesn't really say that that should happen. The thing is that Bitcoin's key characteristic over the last basically year has been constant fucking deviations, maybe even more than a year, maybe like 2 years. Bitcoin's constant play has just been deviating and deviating and deviating, which means just faking out. And that is something which is important to keep in mind. But if we also redraw this a little bit, basically from the same point, but only connecting the candles, not the wicks, we see something interesting here. It's actually painted a little bit better on this chart, where we still got back tests as resistance after dropping below it. So, both instances pretty bearish in that particular case. But the thing that I should, just kind of draw to your attention is that this whole pattern basically emerges on the 16th of February up to, today. So the 22nd. So this is about, 6 days of price action. It's really not that long of a time frame, and that's why I'm not too worried about it. If we saw something like this that stretched across 30 days, or that stretched across 90 days, for example, then yeah, that's pretty bad. But this is happening on a really small time frame, and the fact is that we're still in a really good uptrend right now. I mean, it really isn't anything particularly bad whatsoever. The fact that Bitcoin is, seeing a little bit of a drop right now. But if we actually make this get a little bit worse, here we are with multiple rejections. This one should have been circled too, with multiple rejections off the same level, and this looming threat in the market. Now, this is what I am concerned about. This is something I covered with you repeatedly over the last week or two, and again, those of you that are subscribed are going to be knowing this. Just make sure you've got the bell icon checked as well, by the way, because this is obviously very time sensitive content. You want to get it as soon as it's published. But I covered this with you not only in a video but also on a live stream, because it's so important, which is that Bitcoin has a key characteristic of setting double tops that are fairly nicely spaced out, right? This double top, this top to this top was quite a long time in between the two. It was like more than a year, wasn't it? A very, very long time, about a year and a half, maybe a little bit less. This one right here happened within the same year, but I don't know, like 6 months apart. Very clearly, Bitcoin loves to set these double tops a little bit further spaced out. And these are really big, right? I mean, on this occasion here, the double top resulted in a 69% drop. On this occasion here, down to our absolute low, it resulted in a 75% drop. If we take a conservative estimate for the same thing, it puts us at 7,500. Depending on how you draw this, you would have seen previously that I was also talking about $6,000. Now, I want to make this really clear for the half brains that are watching this YouTube channel. First of all, get the fuck off my channel if you're one of them. But more importantly, if you've decided to stick around anyway because you know this is amazing analysis, I want you to keep in mind that I'm not saying this is going to happen. I'm just outlining a possibility to you. My job as an analyst and as a trader is to accept and acknowledge all of these possibilities and then weigh up which things I think are more likely. I do not think this is likely. I've said this every time that I've spoken about this chart, but for some reason people don't understand that. Obviously most of you do, but those of you that don't, I do not want you here. You're not welcome here. This is a channel that's going into very nuanced, pretty deep technical analysis. I mean, we're keeping it very simple. I'm literally just drawing circles on a chart. I'm not doing anything particularly complex, but it's still quite deep TA. And this isn't cut out for you if you can't understand basic stuff like this. But minus 70% down to 7.5K is definitely a looming threat. It wouldn't be the first time that Bitcoin has done something like this. Bitcoin has proven to us that we don't need to do it just at market tops, because we did it right here when we were already in a downtrend as well. And of course we add on all the other more fundamental analysis reasons for why Bitcoin could be weaker. Could is the key word. Why Bitcoin could be weaker over the next year, 2 years, whatever, with interest rates and inflation, whatever. I don't want to get into that right now. But there's that with the dollar as well. The dollar is kind of the biggest part of that. The dollar is showing a lot of strength right now. We'll probably talk about that a little bit later on in this video as well. But this could potentially, spell some trouble for Bitcoin. And then what that could look like as far as rejections go is, as far as price action goes, is something a little bit like this. Potentially, where we kind of fall down to this $21,000 support area, basically the FTX high, and where we consolidated briefly and where we pulled back down to. You guys are going to remember I was in a little bit of a short position on this drop. I pulled 30-40% profit on part of my position, and the rest was stopped out at break even. So pretty good, still close, some nice gains on there. VIP saw exactly what was going on, and I do want to remind you guys that all trades that I'm making right now are actually happening on OKX, so definitely go ahead and check them out with a link in the description down below. And again, I want to remind you guys that it's literally the first 500 people to take advantage of the offer that actually get to benefit from it, which is not very many of you, so definitely take advantage of that while you can. There's 100,000 plus subscribers on this YouTube channel. You do the math, that's going to get snapped up pretty quickly. This right here, this potentially bearish situation outlining that we do get a small bounce off our 21K level, but we end up dropping down below and finding resistance. This is probably the most important part of this chart that I've drawn out for you, because this shows us that we're going to be potentially back testing areas of previous support and finding resistance there, which is of course exactly what I showed you over here with the ascending triangle pattern. This is exactly the same thing, where we had this area of support. Look, bounce here, bounce here, bounce here, and we drop down, we get rejected, right? So this is exactly what I'm outlining to you here. Not that I necessarily think this is going to happen, of obviously, but again, this is just a possibility and certainly not something that's completely unrealistic. Now, what I think is a lot more realistic, what I think is much more likely to happen is this right here, which is that if we end up failing this range right here, this range outlined here, this basically where we are right now, if we end up failing this green box between 22.7 up to 23.8, basically roughly whatever, it doesn't really matter, I would potentially expect that we find support down here. This would actually be a pretty good retracement for the market. It's this second green box that I've got drawn on the chart, and what I want to do is throw a Fibonacci on here and just see if it lines up with anything, because that is not something I've done yet, and this can actually uncover a lot of secrets of the market. So we've got the 382 support down here. That's beautiful. If we draw the chart from here, we have absolutely nothing in this range. I think it would make sense to draw it from the absolute bottom. Obviously, that's how you draw these Fibonacci retracements. And yeah, I mean, the 38382 pocket literally lines up perfectly with our consolidation range before we ended up forming this little W pattern, basically this double bottom pattern, and then rocketing on upwards. So this makes a lot of sense, you know, if the market kind of pulls back to a level like this. And as I was saying earlier on in the video, as we zoom out onto larger time frames, right now we're on the daily time frame, we look at things like the Ichimoku cloud. Again, we've got Confluence here. This is really strong, guys. You know, I'm not hyping this up enough compared to how strong this actually is in my opinion, but I think this deserves a lot of attention from you guys. You know, the fact that we've got another incredibly strong, incredibly reliable, look at how useful this indicator was as resistance, guys. Like, I'm not making this stuff up. Like, Bitcoin really respects the daily Ichimoku cloud phenomenally well. I mean, it's just got such a good track record. I mean, look at how strong the rejections are too. I mean, this is a huge series of rejections here. Even the smallest one is big. From our top to our bottom, minus 12%. On this occasion here, from our top to our bottom, minus 17. On this occasion here, you pick which low you want to draw it down to. Is it just, you know, is it down to, you know, a temporary low? Well, that's minus 19%. Is it down to the low before we actually crash? That's minus 22. Is it the low when we crash? Now we're talking about the price halving, right? The Ichimoku cloud, basically, to put it short, is not to be fucked with. You know, this is a serious indicator, especially on the daily time frame, in my opinion. Look at it. Look at it right here. Consistent, extremely predictable rejections here. Even when the cloud is small, it's a problem. It's a problem when it's resistance, but it is a blessing when it's support, in my opinion. If we look back at how useful the Ichimoku cloud has been during a bull market, look at this right here, right? Bitcoin had this flash crash during the coronavirus, you know, additional lockdowns in the West, March 2020. And then, you know, we kind of flatlined a little bit. And look at the only thing that allowed Bitcoin to trigger its rally up. Not once, but twice it did that, and obviously the second time on this occasion rocketed Bitcoin all the way up, basically in one key leg, really. I mean, this was basically just all one leg, from $9,000, $10,000 up to more than $41,000, $42,000. So yeah, I mean, there's not much room for interpretation here. This is a very, very useful indicator, and it is actually lining up with some of our supports already. Now, I want to remind you guys that if you don't know what this indicator is, go ahead and type this into the YouTube search bar so that you can watch my tutorial on how to get this indicator, how to use it, my best practices, all the good stuff. And I also want to remind you that that video, when you do watch it, is going to be part of the wider 𝐴 Academy course, which every single VIP member pretty much gets for free after you join, following these steps in the description down below. And that's where I'm basically just telling you everything I know about the markets, all the theory, you know, about how I trade, how I analyze, literally everything from A to Z. And with the VIP package, which you're going to get basically at the same time, you get them side by side. You're also going to be able to watch me trading everything I do in real time. I tell you absolutely everything I'm doing down to the dollar that I'm entering, and so on and so forth. Really, really cool service, especially when you package them together. You've got an incredibly valuable learning experience on one side with an incredibly valuable practical implementation on the other side, which just, I mean, you know, if you use that kind of thing properly, we've had VIP members pull absolutely ridiculous results. So very, very cool. Steps on screen to join. Go ahead and pause the video if you are interested in that. But like I said, Confluence here is my happy word. I absolutely love it, and it lines up with this range right here. So that to me looks very, very strong. Let's actually see. I think the daily EMA ribbon might even be around there. Let's wait for this to load up. Nearly there, I think. Yeah, there we go. Yeah, so it just about lines up. The 200-day EMA is going to be around there. Let's see if we've got the 200-day moving average as well. We did just have the golden cross as well on the daily time frame, so obviously that is quite bullish. Let's wait for these moving averages to come on and see. Yeah, so we've got 200-day moving average over here, 50-day moving average right here. Golden cross happened a fair while ago. You know, I mean, it doesn't really say very much. I think the main thing is going to be the 200-day EMA and the daily Ichimoku cloud itself. So those are two things that I am definitely quite happy to be seeing here. Certainly things that make me at least a little bit optimistic for Bitcoin. And then the final possibility, which I also think is quite likely, I think these two are what's more likely to happen right now, you know, is that we just kind of find support basically where we are right now. And the reason I'm saying that is we're range bound right now. You know, I mean, while we're at the bottom of the range, obviously it looks like we're going to break it. And you know what, we might, right? This could be one of those instances where we kind of drag down a little bit, pull back. You know, we have basically a correction and then the market continues in that direction, right? That's kind of exactly what could have happened right here, but didn't. See, this leg down here could have turned into a really big sell-off, but it didn't. Bulls were ready to step in. So, you know, it's hard to say, but right now, you know, it's very clear that we've been range bound. We've had 1, 2, 3, 4, 5 rejections off this resistance level, and we've had 1, 2, 3-ish, if we count this one, you know, bounces off our support levels. So there could be more in this, right? It could be, it's very much possible, in my opinion, that this thing does continue to, you know, just move sideways. I want to say that that's more likely to happen, but to be honest, the only thing that's made me a little bit less confident in that is looking at things like the dollar. You know, the dollar, and I've been talking to you about this for a while. The dollar is in a strong place, and thankfully it's not really affecting Bitcoin very much. You know, that's what we like to see. I made a whole video about decoupling, which many of you guys requested in a previous video, so just go ahead and check that out. That was a very theory-based video, very different to what I usually do. It actually performed pretty badly compared to other content on this channel, so I don't know if I'll do it regularly, but I think it was a really good video. I wish more people were interested in stuff like that because it's important content. It's actually essential, how do I call it, like filler knowledge, I would say, I guess. So definitely do check it out if you didn't get a chance to watch it yet, because I don't know how many more I'm going to make like that anyway. So if you like it, you know, do let me know. But you know, we are potentially decoupling a little bit, but the point still stands. I mean, the dollar is up and Bitcoin's down, so that's, you know, basically what we've been seeing for a very long time at this point. And you know, the fact that the dollar has had such a strong bounce off the level that we literally expected a bounce from, right? I mean, I was showing you this chart on the weekly time frame. I was showing you this chart on the monthly time frame. You know, that there isn't really a whole lot of room for interpretation on this either. This is obviously a very important bounce zone for the dollar, and there's 6 days left, and we have a bullish engulfing candle right here. So you know, we've been in a very aggressive uptrend for the dollar. You know, is it possible that this is going to recontinue now? Certainly yes. Is it likely? I don't know. I don't really want to make a conclusion on that, but I don't think that that's going to happen. I think we are more likely to just you know, potentially go a little bit higher and find some resistance. You know, the thing to keep in mind about the dollar is that it is a I mean, it's a currency, right? I mean, this isn't a stock, this isn't an index. This is a currency, and it's a very big one at that. So the most typical thing for the dollar to do is something like this, right? I mean, you know, this is, if I just zoom into the chart and show you this right here, and if I told you like each candle here is actually I don't know, a month of trading, so this is basically, I don't know, like multiple years of trading, that would sound really, you know, realistic to you, right? And the reason for that is it's just not that volatile. Now if we zoom out a little bit, yeah, it's been a little bit more volatile, but I think we're fairly likely to find resistance a little bit higher. I think it makes sense. You know, obviously they've done good bits to tackle inflation. It hasn't actually been particularly bad, or certainly not getting particularly worse, is a more accurate way to put it. And we can see the beginnings of that, because, you know, oil is dropping. You know, take a look at this. Oil is also range bound, just like Bitcoin, but it's in a downtrend. You know, we've had a correction up here, fell down. Now we're in another correction, which just kind of looks like a bit of a you know, kind of rising channel, whatever. It doesn't really matter, just some sort of more or less sideways, you know, time-based correction, you know, potentially getting ready to move down. And obviously when commodities like oil go down, that just reduces the overall cost of everything in the world, transport and whatever. And you know, when costs of goods and services and so on get lower, when they decrease, prices become more competitive, prices become lower, and that is the opposite of inflation, right? So that's That's what we've been seeing lately. I'm not trying to say that it's been working amazingly, but it has been working to some extent, and that's why the dollar might not continue to rise up, absolutely astronomically. I think that is something to keep in mind. I'm actually curious. I think we'd see when the dollar peaked end of September last year. That's probably oh no, it's somewhat different time frames. Yeah, it's been a little bit different. Yeah, but with the dollar, a little bit of resistance up ahead, would certainly make some sense, but I think it could spell some trouble for Bitcoin. The bigger thing is the S&P 500, and we have seen, quite a bad start to the week, in my opinion. If we take a look at this on the daily time frame, we're on Wednesday right now. So if we look at, and by the way, Monday didn't have a trading session, so it was literally just yesterday where the market opened. The market closed up here at 4,077, but it opened down at 4,053, which I know is like what, 24 dollar move, or I don't know if it's dollars or points, someone needs to tell me, but it's like a 24-point move. It's really not that big, but it is still a gap, and if the market gaps down on a weekly open, then that's not a good start, right? I mean, that does potentially to some extent set the tone for the rest of the week. I don't know why it's so predictable like that, but it just is. Just go back and back test it, you'll see what I mean. And now, I mean, we've seen a little bit of a pullback today, but it's really not that much. It's really not that much. Wednesday's already coming to an end. By the time you watch this video, probably the US stock markets will be closed. And, then we've just got the day after, we've just got Thursday and the day after that, Thursday, Friday, to maybe find some sort of recovery. And I guess the good news is that we're in a support zone. I mean, this is, if the S&P 500 is going to bounce off anywhere, it's probably roughly around here. So that's definitely a good sign. But at the same time, that there's still a fair bit that the S&P 500 could continue to drop by. From our high down to where we are right now, we've already lost about 200 points, but it could definitely drop down by another 100 points and still be within the support range. And the question is, what happens to Bitcoin if that happens, right? Because Bitcoin is generally still going to be fairly correlated with the dollar. We have with the S&P 500, we have lost that correlation a little bit, right? Obviously, S&P 500 has recovered a little bit. Bitcoin has dumped today, so we are still kind of losing that correlation a little bit. But this is a bigger move, and broadly, what we've seen is S&P 500's pulled back, and so has Bitcoin. So we're still kind of broadly doing the same things. It's not as one-to-one as it was before, right? Previously, it was like one moves forward, the other moves forward. It was very, very predictable. Now it's mixed up a little bit. We still got the general, you know what I mean? Like the general thing is still happening here. And anyway, if that's a discussion that you're interested in hearing, then just go back and watch the previous video. I don't want to recap that too much right now. But yeah, like I said, Bitcoin potentially, could be in some serious trouble, especially when you look at it from angles like this. But I think more likely, we're going to be looking at something a little bit like this, finding support at around 21K, maybe even a little bit closer to where we are right now. Obviously, we are still range bound, so really nothing changes. We haven't even really broken this support level over here, and I think this is a really good area of support for Bitcoin. I think it's one of the best areas of support that Bitcoin has at the moment, and we're basically on it right now. So is this the time that it makes sense to be particularly bearish, when we've already done so well, when we're in a very nice uptrend, when we've had one pullback after another pullback after another pullback within a time-based correction after hitting a high, and we didn't really get rejected from that high until significantly longer than last time? Are we showing signs that we're more bullish or bearish? That's the question that I want you to consider. And for me, the answer is pretty clear. We're showing more bullish signs, and that's why I'm just not too worried. I'm just not too worried. There's so much going in Bitcoin's favor right now. Look at this 4-hour Ichimoku cloud. I mean, this is pretty thick in my opinion, and if we drop a little bit lower, we're going to be in it, and if we don't do anything basically for the next 2 days, we're going to be in it anyway. And when we just kind of float into a cloud like this, it can oftentimes kind of act as a little bit of a catapult. Let me see if I've got, here's it's kind of an example of this, where we just kind of floated into it, but then when the price actually went inside, look, we got a bit of a lift off on this occasion. Look, we got a bit of a, it's kind of crazy, right, how reliable this indicator is. It's really it's so predictable. Look, we find support off the solid green line, the Kumo. It's weird, man. It's really weird. I mean, shout out to the Japanese dude that actually, invented this thing, because this is it's like if an indicator ever came from aliens, it would be this. But I mean, it came from the Japanese, so that's as close to aliens as we've got on this planet, right? I'm going to be in Japan very soon, so if you are there, or if you have any recommendations, it will be my first time. I'll be in Tokyo. Let me know. You can hit me up on Instagram, linked in the description down below, or just in the comment section. I'm very excited for Japan, never been, and I think it's going to be fun. So Let me know if there's anything cool that I need to check out. I'm going to be in Tokyo specifically. Obviously, you just got to start with Tokyo. So definitely do let me know. But with that, guys, I'm done for this video. I've covered quite a lot with you. It's a pretty long one. I want to remind you guys once again, up to 30k in rewards. Super cool. Very, very easy to get. But specifically, just the first 500 of you that take advantage of the offers that we've got, you have an even bigger bonus waiting for you. Just straight $100 fee rebate, which is really good. Basically means you trade for free until you've paid $100 in fees, which is actually pretty useful. It's the same as giving you money, basically. You would have paid the fees anyway. And what actually makes OKX really interesting is that their fees in general are not that high. Their fees in general are actually generally going to be lower than other exchanges, especially other big ones. I'm not going to name names right now, but they are actually pretty well priced in terms of their fees. So that just makes it all the more impressive. And I mean, that's stacked on top of the $30,000. So this is huge. Definitely take advantage of it while you can. I really hope you have enjoyed this one, though. You know exactly what to do. If you have, hit up the likes, subscribe, tick the bell. Obviously, you don't want to make sure you miss out on this very time-sensitive content. Check out these steps on screen if you want to jump inside of my free @gold Telegram channel, where I give you even more analysis on the markets completely free of charge around the clock, ping straight to your phone. And if you want to join @flies VIP, then once you're inside, click on my name and send me a message. That's it. Super simple. Direct chat with me. Ask me anything you like. With that, I am going to be off. Thank you all very much, and I'll see you all in the next one. Cheers.